For those of you who've been watching my videos, you know we've been talking about the bond market. We've been predicting this move upwards. We've been talking about the Fed raising rates, possibly the black swan being that they actually raise more and far beyond what the market actually believes that they will. This could be kind of a black swan. Nobody saw it coming, quote unquote, kind of event. Even though they're telling you they're going to do it, nobody actually believes them. And the market's lack of believing the Fed could end up being its own kind of a black swan. Well, here's the deal. You're getting a massive market sell-off as the Fed announces quantitative tightening. This is just going to spike up the yields even more. It's going to be catastrophic for the bond market. So how does that impact commodities? Well, if you get a big enough of a sell-off, you can get a liquidity crisis, okay? You could get a lot of fear in the broad market because even though commodities have broken off from the broad market, you like your uranium in particular, right? In one of my very first videos, we talked about how uranium was eventually going to break off from the broad markets because when uranium was back here, you know, if the NASDAQ had a bad day, uranium had a bad day and vice versa, right? They traded in confluence. But eventually they diverged from each other and now they kind of trade independent of each other. In fact, we talked about even since then how commodities broadly are developing their own synchronicity, right? Commodities are starting to trade together too. Well, here's the deal. You get a big enough sell-off in the broad market, everything's going to sell off. It doesn't matter how bullish uranium is. It doesn't matter how bullish gold or silver is or how bullish they are. You get a broad enough sell-off, you get a liquidity crisis, and everything sells off because people are just running in cash, right? So this could be what's kind of taking place. And to show you in particular what's happening in uranium, at least what could happen, we're going to go back to the Bitcoin chart, all right? Because I've actually showed you this before. One of my earlier videos, I showed you guys the Wyckoff, okay? You remember back here. We talked about how if you want to learn how to do technical analysis, there's nothing better than crypto because it follows technical so well to the T. And there's so many examples of technical patterns taking place in crypto. But one we're going to look at today is actually the Wyckoff, okay? So in the Wyckoff, you get this leg up, all right? And then you come back to the breakout zone, all right? All right? Come up, 2, 3, 4, and 5. And then you retrace all the way back to the breakout zone, all right? And what you get is, you know what, it'd be better if I draw this. Let's see. We'll do the number 1, the number 2, the number 3, number 4, and the number 5. All right? So this is what happens. You break up, you come down, you retest here, and then you take off. And you essentially get 5 points. And ideally, you would get 1, 2, 3, 4, all being a little bit higher than the prior, right? Until you get to 5. 5 starts rolling over, okay? That's where it starts rolling over. 5's a little lower than 4, all right? And you break down here. You come down to the original breakoff spot, right? And then from there, you take the next leg up, right? So you'll do something like this, like it did right here. If you want to see other places where this has happened, look at BHP. I already marked it up for you. Look. What does that look like? It looks just like the Bitcoin chart we just looked at, doesn't it? Right? Leg up, 1, 2, 3, 4, 5, and you break back down. It was a bit bullish. I didn't quite make it back down here, but you see what clearly took place. It's that same pattern. All right, you can kind of think about it as it kind of makes Bart Simpson's head, right? You see this all the time in crypto. But guess where else you're seeing it? Seeing it in uranium. Look at this. So you get the leg up, okay? You come back here, and this is the takeoff zone, 2, 3, 4, and you start rolling over on 5, all right? I want to show you this because this is kind of happening across the board. Let's look at NXE, Nexgen. Same thing. Jump up, 1, 2, 3, 4, 5, and back down. This is called distribution. I've been talking about this since back here, right? I've been talking about these upper wicks. They do not look good. This is scary. You're obviously reaching resistance, and every time we get up here, we sell off. If you look at the hourly candles, the market opens with strong buying and ends the day with strong selling. This is clearly distribution. Distribution is another way to say selling. This is institutional selling. So for all the nonsense you're hearing from all these, permanent bulls in uranium, you're getting selling from institutions, okay? It's just clear as day. This is exactly what's happening. And now it has to pan out, right? You could still get whatever kind of headline that breaks it up. But I just want to show you that this pattern is obviously taking place, right? It's obviously forming. Even in URA, look at it. It's the same thing. Leg up, boom, we come down to this neckline, 2, 3, 4, 5. And should we roll over, some of these have two buy zones. You'll either get the buy on the trend line. Okay, this is the upward sloping trend line, the long-term trend line. That'll be your first buy. If you want to buy, you can buy there. If we do get a break below that, then this will be a very, 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 very strong second buy. Okay, so just keep these two price levels in mind, because if you're looking to get in or add, these are the two price levels. Now, for the sake of energy fuels, its lower trend line is below, okay? So it would kind of be the opposite. You'd buy here, and if you break here, then you'd catch it on support of the sloping trend. Does that make sense? Okay, let's keep going. Let's look at URNM. I already have this charted, by the way, because I'm on Twitter, and I posted this earlier. If you're not following me, you can, at Liberty Offense. I'll post that below for you. But look, you have this trend, all right? It's clear resistance. And it had big volume today. This is news of Sprott taking over the ETF. Okay, big deal. Failed breakout. Huge upper wick on big volume. Selling today lower than it started off. I'm telling you, this looks to me like pretty good indication that this Wyckoff is about to take place. And you're going to get this sell-off. Now, if you're a long-term investor, this is not a big deal, right? Because you're looking out here anyway. But if you have cash, or you're looking to get in the first place, or you're looking to add, this is excellent news. I mean, you're going to be able to buy down here, all right, in all likelihood. Now, we have to see if this confirms. We have to see if this pans out. But you can chart this yourself. It's not hard to do. Just get these long-term channels, all right? These are easy to chart. And just look for the test, all right? And this is very, 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 very bullish, right? Equities here. So they might not make it all the way down here. But I'd at least be looking at that 200. You know, you kind of look at these case by case. We've talked about this so many times in the past several videos where even if you only want energy fuels, you're still charting the entire sector, because you're going to find confluence of support at the same time, right? You're going to find these things kind of finding support at the same time. Even though energy fuels might be at the 200, you know, Nexgen might fall all the way down to the lower sloping trend. You know, URA might fall, it might break its sloping trend, it might fall all the way down here, right? But they'll probably do it at the same time, and you'll have that confluence of support, that confluence of rebound at the same time. So chart them all together. The important thing to notice here is that this Wyckoff is forming on the daily, and being that I have experience with it, I'm able to see that in advance. And you know, you get a couple more days of sell-off. I think by the end of the week, we'll know better what's going to happen. But as of right now, I'm not buying anything. I am absolutely waiting to hit one of these trends for sure. See, guys, look at silver and silver equities. They're all rolling over too. And we've been talking about this, right? We predicted this stuff coming, right? And it was all based on the bond market. And the bond market is getting decimated today, okay? And this is why I bring it up in almost all of my videos, because you could just foresee this coming. So this is a good thing if you have cash. Anytime you see everything red, right, that's a sign of a liquidity crisis. That's a sign of fear. So it doesn't matter. Even in oil, look at oil stocks, look at rare earth, you know, just all this stuff. It's just getting dumped, okay? Uranium's getting dumped. Gold's getting dumped. Silver's getting dumped. You know, the broad indices are getting dumped. Everything's selling off. Cool. So we predicted this too. We told you it'd be a dead cat bounce in these markets. We've been talking about it. So what do you do next? Well, the thing is you watch my last video, first of all, or my last couple of videos. We talk about how to find confluence in buy zones, okay? And that's what you need to be doing. You need to be looking for these strong support levels, all right? You need to be looking for confluence in the sector. So if you're into silver, be charting all of the silver stocks and be looking for your entry, because you're probably going to find a confluence of support at the same time, just like uranium and gold and everything else. I don't think that the sell-off lasts that long. It'll probably be a quick flush. It might be over this week, but the rebound will be strong. With that being said, though, just keep your eyes open for strong support levels. This is not a bad thing. We're not rolling over. This is not an ominous sign for commodities. It's just a profit taking, a predictable event, and it's going to give you a better opportunity to buy in at lower prices. Reiterate one more time, one more thing. I mean, we've been talking about this too. This trend developing in all commodities where everything is putting in its own bull flag. Some are cup and handles, some are actual bull flags, some are pennants and blah, blah, blah. But they're all doing it at the same time. And they all have the same distinct characteristics, including, but not limited to, consolidation in a bullish formation, right? Which is what's happening through here, while you have a period of slowly declining volume. This is spot silver, okay? Look at spot gold. Look, see this? See this volume declining? You see that? As we consolidate through here, probably putting in another cup. Do you see how that's happening, right? You see how Sprott is going through this phase here. And since it got up there, it's declining its volume too. I've been talking about that. So just be cool as a cucumber, right? Be patient. There's no reason to FOMO. Think about the chart in terms of out here, right? Because that's why you should be investing anyway. Where is it going to be out here on this axis, right? And it'll be up here. So while you're back here, be patient because you might get to buy it right here, right? It doesn't matter how bullish it is. The market's going to do what it wants to do, and it'll give itself any excuse to do it. So let the chart tell you what's happening. And right now, the chart's telling you that Wyckoff is very, very possible, right? And so unless you see it break up out of this and put in a new high, then you need to be seriously watching for the potential for it to come back and retest this zone for real.